Okay, so you have 3 problems from chapter 11, which is the standard costing chapter. This first problem is 15 points. And it's exercise 1120A that we're going to use. Basically, it's calculating missing information for the direct materials variances. So they give you 2 different levels of activity, medium speed bump versus a large speed bump. So we're going to do 2 separate calculations. But basically, with the information that's given, we're just going to populate the variance schedule that we usually use. So for the medium speed bump, we're going to do this column first. Standard pounds per unit is going to be our standard quantity. The standard price per pound is going to be our standard price. So I'll label it over here too. So SQ, this is going to be our SP. So $1 per pound is how much we should pay. And then since we use the SP over here, I'm just going to label it as well. $1 per pound. Actual quantity purchased and used per unit. So that is going to be similar to AQ, but that's AQ per unit. We're going to have to figure that one out. Actual price paid for material per pound is going to be what?
$1.80.
Our actual price.
Oh.
So we're going to use it over here. $1.80 per pound. The direct materials price variance is going to go down here. Direct materials price variance was 1,120 unfavorable. So we spent more on direct materials purchased than we should have, right? The direct materials quantity variance is $100 favorable. And the number of units produced, right, is our output. It's with our SQA. So 100 units. So with the medium, let's figure out what we already have. We can figure out our direct materials flexible budget variance, which is going to be 1,020 unfavorable. $1,120 unfavorable for our price variance compared to 100 favorable. So we're going to net it. And that's how we come up with that direct materials budget variance, right? Let's figure out this information first over here because we have it. We have enough to calculate. Standard quantity times the standard price. So 15 pounds per unit times 100 pounds gives us what?
1,500
1,500.
pounds.
Correct. Units is eliminated. So 1,500 pounds is how many pounds we should have used to produce 100 units. At $1 per pound. So $1,500 is how much they should have spent for direct materials, correct? Is everybody following?
Yes.
I'm a little confused on where you got the total, because isn't it supposed to be like 3 minus 1? Or like the third over here minus
So you're backing into information in this one. The calculation is 3 minus 1, correct? But we don't have that information available, so we're going to use what we have to calculate it. And the total direct materials flexible variance is the combination of these two variances. If you have 100 favorable and an 1120 unfavorable, you net the two to get to your flexible budget variance.
Oh, okay.
So once you have the medium speed bump for this portion done, if we know that our quantity variance is 100 favorable, it means that we used less quantity than we should have. So this one is going to be $100 less than the 1,500. So this has to be 1,400. Correct? We used less than we should have, so our actual quantity is going to be less. How do I figure out the actual quantity? The AQ?
1,400 divided by $1 per pound.
Correct. So the actual quantity is going to be 1,400 pounds. Oops. And we can populate it into both. 1,400 pounds times $1.80 per pound. How much did we actually spend for materials?
$2,520.
I believe that is correct. I just forgot to calculate. Sorry. Yes, 2,520. When you take 2,520, what you actually spent on the materials compared to what you should have spent for those 1,400 pounds, 2,520 minus 1,400, does it recompute to 1,120 unfavorable? Yes. It's a check for the amount that the total variance is by. You should have spent 1,500, you actually spent 2,520. Does it recompute to 1,020 unfavorable? Yes. So you calculated the total direct material variance here. That's this answer. And to calculate your actual quantity purchased and used per unit, we have to do one thing. 1,400 pounds was your actual quantity divided by 100 units produced. Sorry, which is your output. So 14 pounds per unit was your actual quantity per unit. My dog wants on the bed and it's messy.
Oh,
My cats are afraid of your dog right now. They're like
Oh.
looking around.
Are you serious? My dog is afraid of all cats. He's afraid
Yeah,
of
they're like running around trying to figure out where the dog is.
Sorry. Shh, Romeo. Okay, does that one make sense?
Did you use the 100 favorable from the quantity variance to find that number? The actual?
No, the 100 units is your output.
Oh, got it. I see what you're saying.
Yeah. Right there.
What do we use the 14 pounds for?
It's just an answer they're asking you for. We don't usually have it.
Okay.
Yeah. So this problem is having you calculate missing information and kind of solidify your understanding of the variances and what goes into the variances. So you're not going to be using the formulas per se, except for to calculate things, missing information. I think it's fun. It's like a puzzle. It's
Yeah.
not, I wouldn't recommend studying this one first. You really want to get the variances down and really understand the components and then jump into this one.
okay.
So other questions on the medium speed bump, because we're going to move to the large speed bump. Okay. For the large speed bump, we're going to do the same thing. Get up here. And going back to the information, at least we already labeled it, right? So that helps because the labels are going to stay. So the standard quantity or the standard pounds per unit is a big question mark that we need to figure out. So we can just put it in here. We don't know how many pounds per unit. We're going to have to solve for that. For the standard price per pound, we should be paying $1.80 per pound. So I'll plug in the standard price into these two parts. Actual quantity purchased and used is $16 or sorry, 16 per unit. So I'll just keep this off to the side because it's the actual quantity per unit, which is 16 pounds per unit. Actual price paid for the material per pound is $2.10. So $2.10 per pound. The direct materials price variance is 1,920 unfavorable. So I'll plug it into the price variance. Direct materials quantity variance is a question mark. We're going to solve for that. The total direct materials variance is 480 unfavorable. So at least they gave us that. So plug that in. And then number of units produced, our output was 400 units. So let's first calculate our quantity variance. I think that's going to help. And since we have a total direct materials variance, 480 unfavorable, that means that we must have had a favorable variance here. Because if we had 1920 unfavorable for our, and it's just our price variance, just think of it as absolute value. 1920 unfavorable. In order to get to a lower unfavorable, we know that our quantity variance has to be favorable to net against that. So 1920 unfavorable compared to 480 unfavorable. What's the dollar amount that it's favorable?
$14.40.
Yep, 1,440 favorable. So we know that this number in the middle is going to be 1,440, lower than this one on the outside.
Professor, I'm like kind of confused on how we can tell if they're favorable or unfavorable. Because I feel like on the test, like it'll switch it, and I don't know, it's like super confusing for me for some reason. I get, because sometimes it's not always like adding or subtracting. You know, it's like,
You have to think about what you're looking at.
okay,
So if your actual, so this one for the price, you're saying your actual price paid compared to your standard price for your price variance. If you have an unfavorable price variance, that means that your actual price that you paid is higher than what you should have paid, the standard price. And if you look here, it's 30 cents higher per pound. So that's why it's unfavorable. For your quantity variance, you're looking at your quantity used, actual quantity versus what you should have used. So if your actual quantity is favorable, if your quantity variance is favorable, it means your actual quantity that you used is lower than the standard quantity allowed. So you use less than you should have.
okay, and then so the total was unfavorable. So how do you know it was supposed to be favorable?
Because this is 480 unfavorable. It's a lower unfavorable than this one.
Okay, got it.
So because it needs to get lower, then you have to have an offset, which is a favorable. The opposite.
Okay,
It's like a negative number.
I see what you're saying.
Yeah.
Okay, thank you.
Okay, we have enough information to calculate the actual quantity.
Homemade chicken fried rice too.
Oh,
So you're gonna take the 16 pounds per unit.
Orange chicken.
woo!
Orange chicken and white rice for you.
Somebody's getting food.
Sorry about that.
That's okay.
You want to share some with the class?
Don't talk about food around a pregnant woman.
Potluck time.
Okay, so 16 pounds per unit. Times 400 units produced. I'll put it in the right color for you. So when you take 16 pounds per unit times 400 units produced, this is going to give you your actual quantity, which is going to remove the units and get you to pounds. So how many total pounds did they use?
6,400.
6,400 pounds. So I can plug the 6,400 pounds in here. So under column 1, we're going to multiply the 6,400 pounds times 210 per pound to calculate how much they actually spent, right, on direct materials. 13,440. We know that they spent more than they should have, so this is going to be lower. So when you multiply 6,400 pounds times $1.80 per pound, how much should they have spent? $11,520. When you compare these two, does it net to 1920 unfavorable? It's just a double check. Yes. Okay.
Yeah.
Okay. Okay. Now, if we know the middle part, part 2, is 11,520, and you have a quantity variance that's 1,440 favorable, what does the standard quantity times the standard price have to be? The total. 11,520 plus 1,440 favorable because it needs to be higher by 1,440. What you should have spent, because they actually spent less than they should have for the quantity. So you're backing into this number. 12,960 is how much they should have spent on direct materials when they created 400 units. Now we're trying to back into our standard quantity per unit. So we're going to use the information they give us. 400 units times $1.80 per pound. And I know it's not going to recompute correctly, but what's the multiplication here? That gives us a calculation.
720.
720.
So it'd be 18 pounds per unit.
Yep. So you're going to take 12,960 divided by the 720. And that's going to give you 18 pounds per unit, what you need. So standard pounds per unit right here is the 18 pounds. And then the direct materials quantity variance, well, we had already figured that out. 1,440 favorable. Are there other ways of going back and backing into this information? Yes, of course. But I think setting it up like this is helpful because you can calculate different things at different points. This problem's worth 15 points. You're going to practice this one, right?
No. Yes.
Okay. I put in this similar problems over here up at the top. So exercise 1136B, exercise 1119A, exercise 1135B, short exercise 11.5. You guys want to move on to the next one? Or do you have questions on this one?
Questions?
Questions? What's up? Do we need a break before we move on to the next problem? Or do you want to do one more problem and then a break?
Do we have break, please?
Yes.
Thank you.
Okay. I'm going to pause here. So this one is more straightforward. It's just calculating the direct materials and direct labor variances that you're used to. So Dazzle Fabrics manufactures a specialty monogram blanket. The following are the cost standards for this blanket. So the standards, I'll just kind of label it over here. We're going to look at direct materials separate from direct labor, just like usual. Direct materials, 2 yards per blanket at $7 per yard. So what is the 2 yards per blanket?
It's the material. It's standard quantity.
It's our standard quantity per unit. So I'll just put it down below. So 2 yards per unit at $7 per yard. That's our standard price. And then, and this is for direct materials, right? Direct labor we'll get to later. Actual results from last month's production of 2,400 blankets. So that's our output. 2,400 units. Actual cost of 6,240 yards of direct material purchased. So actual quantity purchased is the 6,240 yards. And they paid a total of 40,560 for those actual yards purchased. So I'm going to calculate the actual price paid per yard over here. So 40,560 was how much they paid for those 6,240 yards purchased. So how much did they pay per yard?
$6.50 per yard.
$6.50 per yard is our actual price. Actual yards of direct material used, 5,540. So that's our actual quantity used. We know that we're going to have 2 calculations under number 2 because they purchased a different quantity than they actually used. So for part one, the actual quantity times the actual price. And we'll get to the questions in a second. Actual quantity times the actual price. You're going to take your actual quantity purchased, 6,240 yards. And I'll make it bigger here. Purchased. And you paid $6.50 per yard. So in total, how much did you pay for those 6,240 yards that you purchased?
$40,560.
40,560. Okay.
Yeah.
For the middle part, actual quantity purchased, again, 6,240 yards purchased. And you should have paid how much per yard? The standard price of $7 per yard. So we should have paid how much for those yards that we purchased?
$43,680.
Correct. So we should have paid $7 per yard. We actually paid $6.50 per yard, right? So we paid 50 cents less per yard than we should have. So we're going to have a favorable price variance because we spent less than we should have per yard. And what's the dollar amount?
$3,120.
3,120, correct, favorable. So that direct materials price variance is really holding the AQ standard, right? AQ, and you're subtracting your SP minus your AP, or vice versa. For the middle portion, number 2, you have to do 2 calculations when you have a different quantity purchased than used, right? So for our actual quantity, now we're going to plug in what we actually used, 5,540 yards were used. And we should have paid $7 per yard. So 5,540 times 7 gives us 38,780. How much we should have paid for those yards that we used. For my standard quantity allowed, we're going to take our standard quantity per unit, which is 2 yards per unit, times the actual output, which is 2,400 units at the standard price of $7 per yard. So 2 yards per unit times 2,400 units, you should have used 4,800 yards to produce 2,000 units, right? And you should have paid $7 per yard. How much should you have paid in total for direct materials?
33,600.
600.
Yeah, 33,600 when you produce 2,400 units. You actually paid 38,780, right? Based on your yards used. So you should have used 4,800 yards. You actually used 5,540 yards. So your your quantity variance is going to be unfavorable. You used more yards than you should have. How many more yards, or how much more?
Is it 5,180?
Correct. 5,180 unfavorable. So with this one, what we were doing was we're isolating the quantities, right? We're comparing the standard quantity allowed.
I've got a question. Why is the purchased quantity like? Oh, it's relevant for the direct material price variance. I just realized that because like we don't ever use it when we do the quantity variance, but we use that for the price variance.
Yeah, you use it for the price variance.
Never mind.
So with the standard price, you're taking your standard price times the difference between your actual quantity and how much you should have used based on your output, standard quantity allowed. If you're using the formulas. A little bit more straightforward, right?
Is it?
Yes.
Oh. Oh,
Okay.
yeah, this was brilliant.
Okay. I want you to try the direct labor on your own really fast because it's similar to the direct materials. So fill in the box with the information. So standard quantity, etc. Okay, the information that you're using for direct labor is coming from the same location as the information that you're using for direct materials. So where we got the standards over here is exactly where we're going to find the standards for direct labor. So direct labor, 0.5 direct labor hours per blanket is going to be your standard quantity per unit. So 0.5 direct labor hours per unit is how many you should be using at a price per hour of $19 per hour. Standard price.
Oh, is that not the actual price? That's the standard price?
That's the standard because they gave you the standards up above. Cost standards. Okay. So there's your direct labor standards. The actual output is again the 2,400 blankets. So I just put 2,400 units. And then we used both of this set of information because that's both for direct materials. For direct labor, actual wages were 1,350 direct labor hours. So this is our actual quantity. 1,350 hours. the actual price that we paid per hour, we have to figure out. Obviously, we didn't pay 24,000 per hour. So we take 24,840, how much we actually paid for labor divided by 1,350 direct labor hours. To calculate our actual price paid per hour, which is
1840.
$18.40 per hour. So this actually answers question number 5 right here. What is the actual direct labor cost per hour? There's our answer. So we can just check that one off. We figured that one out. Don't have to come back to it. Okay. For direct labor, we're going to plug in the information. Actual quantity is our 1,350 hours. Sorry. And we actually paid $18.40 per hour. So for direct labor, how much total did we pay?
$24,840.
$24,840. Versus part 2, which is telling us, okay, yes, we spent 1,350 hours and we should have paid $19 per hour.
$25,650.
Yep, 25,650. So for our rate variance for direct labor, right? We should have paid $19 per hour. We actually paid $18.40 per hour. So do we pay more or less per hour than we should have?
Less.
Less by 60 cents, right? Per hour. So we're going to have a favorable rate variance. Maybe they use lower skilled employees, right? Than they were anticipating, or training employees, so they have a lower rate because they're in training. So the variance is going to be how much?
810.
810 favorable. For my last column, my standard quantity per unit is 0.5 direct labor hours per unit. We're going to multiply that times the number of units produced, which was 2,400 units. And we should have paid $19 per hour. So we're trying to figure out how much we should have spent for direct labor when we produced 2,400 units. So how many total hours should we have used?
1,200.
1,200 hours. And we should have paid a total of $19 per hour. So to produce those 2,400 units, we should have spent how much?
22,800.
Correct. So for our direct labor efficiency variance, which is 3 minus 2, right? We should have used 1,200 hours. We actually used 1,350. So we used 150 more hours than we should have. So we're going to have an unfavorable efficiency variance of 2,850. They're not asking you for your overall variance, so we don't have to calculate it. There are quite a few questions that you do have to answer though. So up here, what is the standard direct material cost for one blanket? So this is question number 1. We're going to take our SQ times our SP to figure this out. So our standard quantity for one blanket is $2 per yard. I'm sorry, 2 yards rather per unit, times our standard price, how much we should pay per yard, which is $7 per yard. So to produce 1 unit, it should cost us $14 for direct materials. For number 2, what is the actual cost per yard of fabric purchased? And we had calculated that before. $6.50 per yard. Right? We took our total cost of those 6,240 yards that we purchased divided by the 6,240 yards purchased to get the $6.50 per yard. For number 3, you needed to calculate the direct materials price and quantity variances, which we did. But the way that they're going to make you do it is like over here. So I'm just going to set it up for you so you can see it. Standard price per yard is $7 per yard. The actual price per yard is our $6.50 per yard. So the difference is 50 cents per yard. And you're going to multiply that times your actual quantity purchased, which was 6,240 yards. And you're only including the numbers, not the information, the yards, okay? So your direct materials price variance is the 3,120. And it's favorable because you spent less per yard than you should have, which is exactly what we just calculated over here. It's just the way that they're going to have you set it up. So I wanted you to see it. And this is 3. Sorry, this is number 3. It continued. To calculate your direct materials quantity variance, actual quantity used, which was 5,540 yards. Standard quantity allowed, which is the 4,800 yards. And the difference is 740 yards. Right? You used more yards than you should have at the standard price, which was $7 per yard. So your direct materials quantity variance It's unfavorable because you used more yards than you should have. 5,180. Unfavorable. So it's literally what you have over here, but just written differently. And that answers question 3. Why do I not use this? Do you see how easily you could put in the wrong information? For number 4, what is the standard direct labor cost for one blanket? You have to do the same calculation as you did for number 1. So number 4, you're taking your standard quantity times your standard price, and this is for direct labor. So standard quantity is 0.5 direct labor hours per unit at a standard price of $19 per hour. So per hour, I'm sorry, per unit, it should cost what for direct labor?
Um,
$9.50.
$9.50, yeah. Number 5, we already calculated here. $18.40 per hour. For 6, we did calculate them, but just to write it the way that they want you to write it. Actual rate per hour was $18.40 per hour. Standard rate is $19 per hour. So you spent 60 cents per hour less than you should have. Times the actual direct labor hours, your actual quantity, which was 1,350 hours. So your direct labor rate variance comes out to 810 favorable. For the efficiency variance, you start with your actual hours, which were 1,350 hours, compared to the hours that you should have used, your standard hours allowed, which was the 1,200 hours that we calculated over here. The difference is 150 hours, right? You used 150 hours more than you should have. Times your standard rate, which is our standard price per hour, which was $19 per hour. So the direct labor efficiency variance is equal to 2,850 unfavorable. You used more hours than you should have. So exactly what we calculated here. Give you a second to digest that. And think about questions 7 and 8. So 7 is analyze each variance and speculate as to what you may have or what may have caused that variance. 8 is look at all 4 variances together. Big picture, how might they all be related? What variance is very likely to have caused the other variances?
Just a question. So the way that we're writing this out here is on the test, it's going to ask us to input the answers the weird long format way.
Yes, this way over here.
Yeah, to the right.
Correct.
Okay.
But I think that it's in your best interest to do it this way and then
Do it
populate
the
it.
not weird way and then transfer the answers over.
Correct.
Okay.
Chris, to answer your question, we did go over that one. For number 5, you took your total cost that you paid for direct labor, 24,840, divided by the actual hours, 1,350 direct labor hours, to get 1,840 per hour, what you actually paid. Anthony, you have a question? Let me see. For number 7, what caused the variance? How could you have a favorable price variance for direct materials? What's the likely answer?
You bought cheaper materials.
Yeah, you bought an inferior good, right? The way that we probably are assuming that we used an inferior good is because you have a favorable price variance for direct materials and an unfavorable quantity variance. So you used more of those goods than you actually should have. And that would make sense if you're using a cheaper quality input. It breaks more, you have more waste. So it's more likely that you're going to use more. It could also cause you to incur a higher direct labor cost, right? So they used a whole bunch more hours in direct labor than they should have. And it's likely due because of that inferior product that they purchased, as well as using a lower skilled employee. For number 8, we kind of just answered it as well. So the inferior product really is the reason for all the variances that you're seeing.
So we blame the purchasing department.
You don't blame them. You just say, hey, let's not purchase that item again in the future. Because honestly, it was not a good call. So this problem is 25 points. It's more in depth. So I gave you more points for it. How do you feel at this point?
Are good, but when that second half kicked in, I started like, whoa, but
You'll be fine. I know it.
it was fine.
It's just some practice, writing it out. Label everything. Don't just write numbers. That's where you definitely get messed up. And when I say you, I mean everyone. So label everything. Questions before we move on to the last problem? Yes, no, maybe so. You guys still there?
Still here.
I
No
think we
question.
did the next problem.
No
Ready
questions.
to move to the next problem?
Sorry,
Yeah.
Professor, I lost track for number 8 and number 7. We already calculated.
It's not a calculation.
Oh, I see. Answer. Yes, thank you.
So that it's qualitative. So you're just looking at the information and kind of analyzing it.
Thank you. I got it.
You're welcome. Okay, for the last problem for chapter 11, it's also a direct labor variance. And you're working backwards to calculate the direct labor variance. So it's kind of similar to that problem that you did for direct materials. So this time, the only difference is that it is a word problem. So a little bit different setup, but not quite as intense as the direct materials one, I don't think. So we're gonna do problem 1152A. And I put some similar problems up there too. Woodsy Music manufactures harmonicas. Woodsy uses standard costs to judge performance. Recently, a clerk mistakenly threw away some of the records and only partial data for September exists. Woodsy knows that the total direct labor variance for the month was 320 favorable. So we will write out our little chart again. So we know that we have actual quantity times, oops, wrong color, actual price. Under number 1, we have our actual quantity times our standard price under number 2. And then under number 3, we have our actual quantity allowed, or sorry, standard quantity allowed at our standard price. We know that when we're comparing 1 to 2, that we're calculating our direct labor rate variance. And when we're comparing 3 to 2, we're calculating our direct labor efficiency variance. And then when we're comparing 3 to 1, right, that's our total direct labor variance. So they've given us 320 favorable as our total direct labor variance. So we can put that here. 3 minus 1 is 320 favorable. And that the standard labor rate was $12 per hour. So that's our standard price, right? A recent pay cut caused a favorable labor rate variance of 70 cents per hour. So AP minus the SP gives us the 70 cents per hour. So we will use this somehow. The standard direct labor hours for actual September outputs were 5,300. So that's our standard quantity allowed. 5,300 hours.
Why is that the standard quantity allowed rather than just the standard quantity? Because it's
So
the actual
standard direct labor hours for actual September outputs. Because the standard quantity is a number of hours per unit. They didn't give us the units. They told us the actual based on actual output. So they already did that multiplication for us.
Okay.
So they already figured this part out, the SQA, which is the 5,300 hours. So we can plug in what we have. Standard price is $12 per hour. So 5,300 hours times $12 per hour gives us how much we should have spent for direct labor.
Uh, 63,600.
63,600. Wait 1 second. Sorry. That is correct. 63,600. Yes. Given that we have the 3, we have enough information to back into the 1. So 63,600 is how much we should have spent on direct labor. We have a direct labor variance of 320 favorable overall variance. So that means that we spent 320 on direct labor less. So 320 less than the 63,600, what we should have spent. So we can calculate this amount here. 63,600 minus 320 favorable direct labor variance. Because we spent less on direct labor than we should have overall. How much in total should we have, or did we actually spend on direct labor?
63,280.
Yeah, 63,280. A recent, okay, so sorry. We're gonna have to figure out more information. Oh, wait 1 second. I need to close the door before my daughter gets home. Sorry. Okay. We're going to use that 70 cents per hour to figure out our actual price that we paid per hour. So since we have a rate variance of 70 cents favorable per hour, to get that rate variance, we're comparing our actual price paid per hour to our standard price per hour, right? We know that our standard price per hour is $12 per hour. So is the actual price going to be higher or lower than our standard price per hour? If it's
Lower.
a favorable, lower, right? So we're going to take $12 per hour minus the 70 cents favorable variance to get our actual price that we paid per hour, which is $11.30 per hour. Does that make sense? I'll make this longer. we needed to figure out that 1130 per hour so that we can back into our actual quantity. So the actual hours. So now that we have that, to figure out our actual quantity, right, we're going to take our actual price paid, which was the 63,280, which is essentially AQ times AP, divided by the actual price that we paid per hour, which is 1130 per hour. And this is going to give us hours. Dollars divided by a dollar amount per hour gives us hours. How many total hours do we actually incur?
5,600.
Yeah, 5,600 hours. Now we have 5,600 hours. We carried over here at a standard price of $12 per hour. And you can figure out that middle portion, right? $67,200 is how much you should have paid for those actual hours. You actually paid $63,280. It's a favorable variance, right? Overall of what amount?
3,920.
3,920. Favorable. For the efficiency variance, you should have only used 5,300 hours. You actually used 5,600 hours. So it's going to be unfavorable. And the dollar difference is 3,600 unfavorable. So to answer the questions, find the actual number of direct labor hours worked during September. You did, it was the 5,600. There's number one. First, find the actual direct labor rate per hour, then determine the actual number of direct labor hours worked. So they kind of told you how to do it. Compute the direct labor rate and efficiency variances. Do these variances suggest that the manager may have made trade-offs? So you have a pretty substantial rate variance that's favorable, and you have a pretty substantial quantity variance that's unfavorable. So what appears to have happened here?
We use less skilled workers.
Yeah, we use lower skilled workers who are typically cheaper, and they worked more hours than they should have, right? Because they're probably learning. So he did make a trade-off. It's fine. It's still favorable variance overall because the lower skilled workers cost them less per hour. That's the test. So I know chapter 11 is a beast. It always will be a beast, no matter what class you take, because standard costing is a difficult topic, like I told you at the beginning. but I think you guys have enough time to practice because you don't have class on Wednesday. It's Veterans Day. So thank you, veterans, for thank you. Not for the fact that we get a break, but for the fact that you served. So thank you very much. I will be available during my office hours on Tuesday and Thursday. You do have your project that's due technically today. If you need a few extra days, take it. If you have questions, email me the spreadsheet and your questions. And use the extra time this week to study. So
Thank you.
have a beautiful week. I'll see you next week.
See you soon. See you later.
You.
Bye bye.
Bye.